Welcome back. Today I want to look at this question from November 2017, question 4, financial statements of a company. So the question is, the front-end balance was extracted from the books of Nightshade Limited as at that September 2017. So we have the rags and building. So the amounts are in, we'll put the zeros on top, the 3 zeros, so that we have now 151,000. And then motor vehicles at cost 60,000. So these are in millions. Accumulated depreciation of motor vehicles 1st October 2016 you have 15,000. Purchase and sale we have 1,204,000. We have inventory of 91,000. Revenue reserve of 66,700. General expense of 2,325. Salary and wages of 244,150. Electricity bills for 5,600. We also have back balance for 42,200. Interim dividend paid for 7,000. Motor vehicles expense 475. Insurance 7,150. We also have discount allowed, a discount received of 10,900 and 8,300 respectively. Bad debts written off of that 50. Account receivable and account payable, we have 136,500, sellers 107,700. We also have debenture interest paid 2,400. Ordinary shares, which is 40 shilling per value, amounting to 160,000. Share premium 36,000. 8% debentures of 60,000. Cash in hand 9,000 and direct fee of 40,000. So we have additional information that states goods costing 710,000 purchased on credit on 29 September were entrusted in and therefore had not been entered in the books by close of business on that September 2017. So these are good in transit. So we are going to adjust that. We also have inventory as at that September 2017 was valued at shilling 112,300. Then a debtor who owed the company 1,500 was declared bankrupt. His debt has not yet been written off. Then allowance for doubtful debts is to be set at 2% of the outstanding receivable. We also have depreciation is to be provided on motor vehicles at a rate of 20% per annum on cost. Also, during that September, we had outstanding motor vehicle expense amounting to 125, while prepaid insurance amounted to 1150. So, invoice issued amounting to 950 had completely been omitted from the record as that September. Then provision is to be made for outstanding debentures, interest and corporation tax of 22,975. The director have proposed a final dividend of 2.5 shilling per share. So we are told prepare income statement for the year ended that September as well as the statement of financial position. So we are going to study the income statement as well as the adjustment of each one of these. So let's continue. Let's start. So we minimize our question so that we can be able to calculate as we preview it. So our title, we're going to have income statement for Nightshade Limited for the year ended that September 2017. So here all amounts are in zeros. So you can add the shilling 00 or we leave it like that. So we are going to have our descriptions, our workings and our amount. I put the working on the notes here so that we can have a proper way to view it. So we see the financial statements of a company resemble those of sole traders with some few adjustments. So we are going to start with the revenue, which we have been given to be 1,574,50 shillings. So And this is we have the purchases and sales. So the sales are our revenue. So then we have been told that the invoice in note 7, invoice issued amounting to 950 had completely been omitted from the records on that. So since we had omitted this, so we have to add our from our revenue. So we are going to get 1575, and then we go directly to the we are going to get the net sale, so we go direct to the cost of sale. So we have opening inventory as per TB. So we are given as 91,000, as you can see, and then the purchases we have been given, it is 1,204,000. So we add that so that we get our goods available for sale, which is 1295,000. Then closing inventory. So we are going to treat this the good costing 710 purchased on credit were in transit and therefore had not been entered in the books by close of business. So we are going to add those goods in transit to our inventory. So when we add, we are going to get 112,300 plus 710. So we are going to get 113,010. So we have to rest this because we are resting the closing inventory. So that we get our cost of sale to be 1181,990. So when we subtract this from the net sale, our gross profit will be 393,010. So that is our gross profit. As well as we have to add our the income. So we only have one, which is discount received of 8,300. Then we go to the expenses. So for the expenses, we are going to add all the expenses, then we subtract them from the gross profit. So we have been given the general expense to be 2325. We also have salary and wages. As you can see, we have 244. Then the electricity, that is 5600, that is given. Then also the insurance. So for the insurance, we are given 7150, but we have been told on our addition information you have a prepaid. So we have been told as at that September, outstanding motor vehicle expense amounted to 125, while prepaid insurance amounted to 1150. So you have to subtract that so that we get our insurance expense as this year, so which will be 6,000. Then we also have the motor vehicle expense. So we have 4475, and we have been also told that the vehicle expense amounted to 125. They were outstanding. So we also have to add those accrues so that you get 4725. Then you also have to calculate the adjustment for the depreciation. We have been told that the motor vehicles at a rate of 20% per annum at cost. So we are going the cost of motor vehicles we have been told is 60,000. So 20% of 60,000 in a straight line basis, we are going to get 12,000. We also have the director's fee, which is 40,000. That one is given. Discount allowed, we has also been given to be 10,900. You also have now the bad debts written off, which were 30,50, and you also have additional bad debts. This one for a debtor who owed the company 1,500 are declared bankrupt, so you have also to add that. Then you also have to adjust this provision for doubtful debts. We have been given provision for doubtful debts. Allowance for doubtful debts is to be set at 2% of the outstanding receivable. So from our TB, our doubtful debts Account receivable is that 136,500. So we also have to subtract the bad debts, which we are being told it's 1,500, and then we find the 2%, the 2% that we have been told. So we are going to get the 2%, which will give us 2,700. So after you subtract, you are going to get the 2,700 on that. Then you have the total. After you add, you are going to get a total operating expense of 332,950. So you have to subtract that from the gross profit. So on our expense, the only adjustment we are doing is for insurance, motor vehicles, and the depreciation, as well as the provision for. Those are the only workings that we have made. All the others have been given. So if you input the correct values on this given, you are going to get the marks. So when you subtract, you are going to get the 68,360. That is our operating profit. But you also have to less the financial cost. So the finance cost or the debenture interest, we have been told it was paid 2,400, but here on our notes we have been given to be 8% debentures of 60,000. So we calculate that to get 4,800. We have to split this because we have paid 2,400. So 2,400 has been paid as well as accrued 2,400. But the total, we shall take the total of 4,800. We rest from the operating profit. So profit before tax, it's 63,560. Then your corporation tax, we have been told on our note 8 is 22,975. So we less that to get our net profit to be 40,585. So this is what you are supposed to do in a financial statement for that company. So any question from up to that point? So we should continue so that we can be able to do now the statement for financial position as at that September. And remember this, the net profit, we are going to transfer it to the capital on the reserve part, on the capital reserved, or the reserved fund, revenue reserves. So let's continue and calculate the financial position. So I have just pasted this question again. We are going to start with the descriptions as well as the working I have inputted at the center so that you can be able to view it. So we are going to start with the non-current asset. We have the road and buildings. So of 151 motor vehicles. So for motor vehicles, we have to get their net book values. So we have at cost, we were told this 60,000. Accumulated depreciation as well as the depreciation for this year. So we have to raise the accumulated depreciation of which we have been told which was 15,000, as well as that for this year in our calculation you have seen it is 12,000, which will give us 27,000. Then we also have so the net book values for motor vehicle shall be less that you shall obtain to be 33,000. So when you add the two assets, non-current assets, you get 184,000. So that is our total non-current assets. We also have now the current assets. We have our inventory, opening inventory, which was which we have been told it's 112 in our addition information. So inventory as at that September was varied to be 112,300. So we are not going to use this one of 91,000. That one we utilize it when doing the adjustments that was supposed to do in our income statement. So we utilize the opening inventory. Then we have to include now the goods in transit. So the goods in transit, we add the 710. So we get 113,010. Then we have the account receivable. We have been given to be 136,500. We also have to add the invoice which was omitted of 950. We have to rest now the we have been given the 1500. That one was across the debtor who was bankrupt, as well as now the total of 2700, which was provision for doubtful debts, which we calculated, of which was 2700. Any double entry logic have to have the two effects, so you have to understand that. So you also have the prepaid insurance. We had been paid 7150 for the insurance, but as you can see, since we had prepaid insurance amounting to 1150, we have to raise the 6,000 that we had calculated in our insurance. So we had 1150 prepaid, which was amounting to 6,000. So the prepaid insurance, you can take this one from the notes, or you less the 6,000 that we calculated on top. So we are going to add the 1150. Then the bank, cash at bank, we have been given, and as well as the cash at hand. So the bank balance 42, while the other one is 9,000. So the total asset will be 42,610. So when it will be 298,610. So when you add the non-current asset, the total shall be 482,610. So we go to the equity. So the share capital. So we have been told that the shares, we have 40 sharing per value. So in order to calculate how many shares we had, we were to divide the amount of 160. We divide by the shilling 40 per value, so that we have 4,000 shares. So the 4,000 shares, if you multiply by 40, you get the 160 amount. So it's the same case. You can take the amount or you divide, so that you first of all know how many shares the company has. So let's continue. The share premium you have been given to be that 6,000. Also, the revenue reserve, we had been given to be 66,700. We also have to add the net, the net profit of the year, which we have seen it's 45.85. Then we have to less now the dividend that was paid, the interim dividend of 7,000. So that we get 100,285. So the total equity, you are going to get it as 296,285. So that is the part of the equity. For the non-current liabilities, we only have one, the 8% debentures, that is a long term, which is 60,000. For the current liabilities, we are going to start with the accounts payable. We have been given the accounts payable. So accounts payable amount to 100,700. Then accrued motor vehicle expense from the notes in our working 6, we are being given to be 125. So that is also an accrued. You have to add that. We also have an accrued debenture interest payable, which we said was 2,400. So you get the 8%, which was 48, but you had paid 2,400. So you have to rest that 2,400 to get 2,400. Then you also have the proposed final dividend. The director proposed a final dividend of 2.5 shillings. So we multiply by the 4,000 shares that we have, we get 10,000. A corporation tax of 22,975, it has also to be recorded, so that you get the total current liabilities to be 136,200. So the total liabilities will be 60,000 plus this to get 196,200. So total equity and liabilities 296, 285 plus 196 to get 492,485. So you have the total assets, which was 482,610, and the total liabilities and equity to be 492,485. So you have a balance difference of 11,875, as you can see. So these are some of the information that maybe have occurred either during this good in transit provisions or the depreciation, any one of them. But after if you have included most of these cases correctly, you are going to get most of the marks. So these are the way how to handle these questions, and for sure you are going to pass if you can have it done like this. So thank you. Let me get have any question in the comments. If you have, I'll try my best to guide you through. And if you have any additional information so that we can know how this is going to balance, let me know. So thank you and welcome.